We are about to go live. Yeah, right now. Welcome, everybody. Let me see your one in the chat box. Hey, Joseph. Happy to see you, Victor, Emmanuel, Vivian, Namdi. I'm excited to see every one of you on call today, and we're going to get right into it. Just give me a minute. Okay, I think we're good to go. Straight away, we already know what we are working on. Welcome, everybody. We already know what we are on, so I'm not going to spend much time going back and forth. Yeah, so we had a trade idea sent to the group today. We had a trade idea sent to the group, and this was what was sent. And man, this is one of those painful trades, you know. Okay, so what happened was, I mean, when the trade idea was sent, price was still somewhere here, right? Somewhere down here. And as soon as it was sent, you know, price began to rally back up. We sent it around the time when New York session was about to begin, and we were anticipating that price would, you know, reverse a little bit, tap into this area, and then fall. Now, ideally, what I was looking at was somewhere between this zone, you know. So I had two zones that I was watching, this area here. So we had this other block here, and we had this other block here. So ideally, what I was marking out was this area. But whenever I want to send you guys trades, I want to send you guys the trades with the highest possible, you know, setup. So I had to increase the stop loss all the way up here. Personally, I didn't even like, you know, trades that have huge stop loss as high as maybe 15 to 20 pips. I'm usually comfortable with trades that are around, you know, between 5 to 10 pips, right? That's usually my target. So if we were going to take this trade like this, our entry would have been here, and, you know, would have had 9.4 pips stop loss, and a higher risk to reward would have not been stopped up. But this is fine. This is fine. So what essentially happened was that the trade basically tapped our entry, did not trigger us in, and, you know, from that point on, just kept going to TP, right? So I think at this point, I'm not expecting price to go back all there because we have broken structure right here. So what I can expect price to do is come back into this order block much later and then rally down. But because today is Friday, I would not be looking forward to take a trade around this time. You know, the day is already winding up, although we're just around 3 p.m., but the day is already, you know, obviously closing for the week. No problem. This week, quite, I would say, was a roller coaster. This week was a roller coaster. I'm just going to mark this down and leave it here. Let me see how the chart, you know, responds to this much later. This week was a roller coaster. We had a lot of really funny setups, you know, a lot of manipulation. Today I was watching a trade on gold, got in, saw some good profits, and shortly after the trade reversed, took me out at break even. Let me see if I can load that up. Let us go to gold. And let me go to 15 minutes. So look at what happened. I was in this trade, got in somewhere up here. I was targeting these lows right here. The trade put me in profit up to this point, and then took me out at break even, you know, through a week to stop people out basically, and then began to push to the downside. And as you can already see, this basically just came to form an M pattern. Because I don't exactly trade patterns, it wasn't something I was looking out for per se. Yeah, so this basically came to form an M pattern. So I can probably expect this to come all the way down here to fill up this imbalance that we have here. So a lot of the trades I've been having, you know, for the last few days, I mean, through the course of the week, have not been the best of trades somehow. I had an amazing week last week. This week is seeming to be quite, let me just, you know, this week is seeming to be quite daunting in terms of taking trades, but let us go ahead, right? Euro USD is already pushing down. This as well. Actually, I had my own trade set up, something like this, when price pushed down and began to, I kind of got out of the trade because I was expecting price to come back up, and then I wanted to take a higher entry actually, like from the 1 hour rejection block, but price is not looking like it's going to come back up again. So we're going to move on. Now for today's class, there are a number of things that I want to show us. I don't think we have dealt with those things before. I would switch to my mobile device right now, and we'll do it. Okay, I will do it on my phone, and I would maybe ask someone to do it on his or her phone. Okay, you guys, I wouldn't want to mess up your demo account, so I'm not going to ask you to do it on your phone, but I believe when I do it on my phone, it's going to be clear enough for you to understand. Okay, so let us do that very quickly before we go on with the class. So let me activate my mobile device and make that. Okay, I thought I was already in. Oh, okay, I quit Zoom. All right, just give me a second to get back into the meeting. Okay. So I told you guys something before about taking. I told you about taking partials, and I don't think I ever got around to showing you how that works. And that is what I want to show you today. So what I'm basically going to do is I'm going to share my screen from here and here. I believe you can see my screen right about now. Okay, you can see my screen now. All right, so I'm going to go to my MT5, and I have one demo account that I just want to, I set up this trades just right when we're starting the meeting so we can, use it to test what I'm talking about, right? So if you notice, on the first trade, I've entered with a lot size of 1, second trade, lot size of 1, third trade, lot size. I use a standard lot size, right? I think that's a better way to say it, not a standard, not a lot size of 1, right? Let me see if I can annotate. Give me a minute. Resume. Okay, I can't find the option to annotate, guys. Anyways, so how do you take partials? So let us take any of these trades, for example. All right, on AUD/USD, we are in profit of around $40. GBP/USD, we're in a profit of over $100. So let's say for GBP/USD, I'm kind of satisfied with the profit I've gotten, and let me say I want to close a portion or a part. I don't want to close the entire trade. I just want to close a part of it, right? So what I'll do is I'll basically, now it appears differently on every phone. For Android devices, it appears differently, from how it appears on iPhone, but basically the instructions are the same. So I just tapped on the trade that I want to modify, and I click close position. Now, the good thing about closing position is it doesn't just close right away. It will bring up another screen where you have to set up how you want to close. Okay, so right here, where you see this option, this one right here, when you're entering a trade, this is where you set up lot size, right? Lot size. So I can just highlight it. So if I want to close 50%, the 50% of 1 is basically half of 1. The half of 1 is 0.5, right? Which is 1/2. I want to close half of 1, which is 50%. So I change the lot size to 0.5 and I click close. Look at this. If you saw what happened, it showed that it had closed 0.5% of the position. Now, if you see right here, this Euro/USD trade, we are still running in the sell, but we have closed a little. Look at the history, right? This is the history. Let me go to today. Can I go to today? Okay, this is the most recent. So this is the one I just closed. This is what I just closed. This $31.50 dollars. That is the particular one I just closed on this trade. I'll do it one more time. Let me use GBP/USD, and I'm going to use a different value. So let us say I just want to close 30%, for example, approximately 30% of my GBPUSD trade. All I need to do is click GBPUSD, click close position, and approximately 30% would be around 0.3, I guess. You can do the math and let me know whether I'm right or wrong. And then I've changed the lot size there. All I need to do now is click close. Look at that. It says it has closed 0.3 of the position. If you check the history, we have closed a portion of our GBP/USD trade, right? The same happens if this was a buy. I mean, it's not different whether you're buying or selling. The same happens if it was a buy. Okay. Yeah. So I can keep doing that over and over again. I want to just get it. So this is basically what it means to take partials. It's not anything complicated. There's no strange thing about it, right? So let's do the same thing for AUD/USD. I want to take partial AUD/USD, modify position, and already you know how to close a trade. For you guys, if you want to close the entire trade, you can just tap it and click close, and the entire thing would close. Like when you click close, already, if you see on EUR/USD, the total lot size running is 0.5. When you click close, the default lot size here will be the total lot size. If I do not modify it, if I do not change it, and I just let it be the way it is, it will close the entire thing. But if I close only a portion of it, let's say I want to close out another 0.1% and I click close, you would see it has closed another 0.1. Okay. Let me set this to show what's today's date. Today's 17th. Yep, 17th of June. Okay. For some reason, I don't know, but I'll deal with that later. Okay. All right, these are all the trades running at the moment. That's how you close partials, basically. All right, that is good. So I think at this point, we can switch back to our charts and let us get back to the matter of today. Let me stop sharing here and we are done. Okay. Welcome, guys. Welcome, welcome, welcome. And we are good to go. Yes. And EUR/USD is just pushing down. Don't worry, let's not beat ourselves over it. We would always have good setup, right? It just remember that one of the major things that we dealt with when we're starting the entire program was trading emotions. And there are certain emotions that everybody's going to go through. It doesn't matter how long you've been trading, you would experience certain emotions. There are certain things, especially when you've had your expectations. Maybe there's a target you want to meet. You've told yourself, hey, I'm going to make 10% within a 2-week period or within a 1-month period. And then maybe you are up 5% and some bad trades take you back down to 3%. And then you get up 8%. And that percent of bad trades take you back down to 2%, stuff like that. You're bound to get somewhat frustrated, or tired, or like, what the heck is going on, but because you understand that it is the nature of the market, you wouldn't let such market conditions get to the core of your being. So it's not a problem, right? Let us keep going. I'm trying to just remind you because we are just starting the trading experience for every one of you here. And soon enough, you can get frustrated. I mean, we can possibly have weeks where you are a good trader, but your trades are basically just hitting stop loss. And I'm wondering what exactly is going on. And at that point in time, you need to stop, take a minute and reassess. You need to reassess, hey, what is going on? What am I doing wrong? Am I seeing something wrong? Am I doing something wrong? Something I shouldn't be doing, but yeah, not a problem at all. Now, let me take us to my favorite chart setup, which is this one. I like dark mode, and it enables me to set up the colors properly or well enough that you can see. So look at that. That is the gold trade pushing down hard after taking us out. I just want a plain background that I can use to scribble stuff. Okay. So we have been dealing with the W pattern, which is basically a pattern that looks something like this. And a recap of what we've been dealing with so far is we have made you understand that your W pattern does not exactly always appear with this kind of clarity. It's not always this clear where you have, a very clear W looking like this with relatively equal lows, maybe just sitting perfectly like this. Now, you would have your W pattern looking differently at different points in time. It could come, looking like this. It could come looking like this. There are times when it could even be like this. It is up to you to be able to filter what is going on, be able to see now. But all of this happens when your eyes have been trained to understand how the charts are forming. And this is why we highly recommend that everything that is being taught, you need to practice. Do not expect that after 1 hour of our Forex learning class in 2 days, you will now just all of a sudden go and press a magic button on your chart and you become profitable, right? I mean, it is possible by a stroke of luck, but we want to get you to the point where you can apply the same set of principles over and over and over again, so that you are not one of those traders that guesses in the market, right? Because statistics has it that 90%, which is actually a very large number, if you ask me, 90% of traders who just start trading blow up their accounts. What kind of crazy statistics is this? Now, you would ask yourself the question that if 90% of traders are blowing their accounts, why am I interested in trading? Because this is one of the major reasons why people even get this discouraged in the first place. This is one of the major reasons why people say, Forex is not for me, right? And if you tell anyone around you that you wanted to start trading Forex markets, one of the things you would most likely hear is, hey, you are going to lose money. So people even have it as an ideology that if you never lose money, you never start. I want to put it to you that, look, it is possible for you to trade and not be that losing trader, right? Whatever you accept, I believe Mr. Oji has already talked about this in one of our human capacity development sessions. Whatever you accept in your psyche is what you see happening in your reality. I am living proof. When I started trading my live account, I mean, I had learned for months, applying and sharpening the skills until I felt comfortable enough to start trading. And eventually, when I started trading, I was flipping accounts, which is not even something I enjoy doing right now. I feel like it's stressful, right? Because the risk management has to be out of place for you to be able to flip accounts and all that, right? I put in a small amount and I was just multiplying it, right? Eventually, I blew an account, right? I blew an account after like maybe 2-3 weeks of doing that, but I did not blow my capital because I had, already made a lot more from what I put into the market. So eventually, when I lost the account, I did not lose my actual money. You understand what I'm saying, right? So what I'm saying in essence is, it is actually possible for you to sharpen your skill to the point where eventually, when you get into the market to begin trading, you are not coming as someone who is coming to gamble and guess, hey, the market is going up, let me enter, or it's going down, let me enter. Now, that's not the kind of those are not the kind of traders that we're polishing or bringing up in this place. All right. Cool. So I believe that you have already understood this. I mean, sorry, the part where we talked about taking partials, because soon enough, I'll be giving instructions in our trades for us to take partials, right? There are certain trades, that would have, I'm so sorry, I didn't get enough sleep, so I'm a bit exhausted, in fact. Right, there are trades that have a lot of potential that would ask you to not close out completely off. For example, this Euro USD trade has the potential of going all the way down to this point, right? So we're looking at it getting to this low, right? We're looking at it getting somewhere into this range, somewhere in this range, or even maybe wider this range, right? So but instead of holding the entire position to get us down here, what we could do is when price gives us maybe like when we are up 1 to 2, 1 to 3, we can decide to close out of our position, close out of the position, just a portion of it. So I can say, all right, guys, close 50% of your position here. So when I say close 50% of your position here, so close 50% of your position at, let me see what the price value is. 1.04598. Now, if we have for this particular trade, I think we entered with a lot size of 0.6. If you are closing 50% of a position, it means you are going to close out 0.3, right? We're closing out 0.3. That's basically what closing 50% of a position means. Or guys, we are taking partials, we are closing 50% of the position. And I'm saying it again because we'll soon start using those terminologies. You have to get used to it. All right. So I want us to refresh on our chart patterns very briefly before we continue. I want to introduce another chart pattern to us that I want us to be familiar with. And all of these things, like I said, the market is fractal. The market is fractal. So whatever you see happening on the lower time frame, you can most likely see being replicated on the higher time frame. I'm trying to set this up now. Okay. Now, first of all, before we go ahead, does anyone have any question concerning our double tops and double bottoms that they would like to ask, so I can clarify that before we move on? Because I'm not going to talk about it too much before we move on to the next thing that we want to talk about for today. Does anybody have any question about that? Let me give us a moment. Questions, anybody? If there are no questions, I'm going to assume that everybody already understands what we'll be talking about, and then we will continue. Okay, please, Ebere or Chino, any of you, please remind me, there are two things I said I wanted to share in class today. One of them was taking partials. What was the second thing? When you remember, please put it in the chat box. So I've now look at what happened here. We have this nice extension to the upside right here, right? But what did price form before it did that massive extension? Clearly, we have a W pattern. I've already drawn it right here, right? We had this nice extension, and funny enough, I had marked this entry. But I wasn't, for some reason, I wasn't confident enough to take it because before this time, price was, giving me bearish. It was looking bearish, right? So I was expecting price. I did not expect this kind of massive extension to the upside. But hey, price did it, and what can we do, right? So, but I wanted to note that this was a classic reversal pattern. Classic reversal pattern. Price kept coming, came here, formed the W pattern, accumulated whatever it is you wanted to accumulate, and then pushed up to the upside, right? Again, let us do what we did in our previous class, and then let me check the chat. Oh, when to move to break even. Thank you for the reminder. Thank you. When to move to break even. That is another very, very important part of today's class I'm going to talk about. But let me finish talking about these chart patterns first, and then we'll get to that. Just give me a minute, please. I sincerely apologize for that interruption. Okay, so when to move to break even. I think that is a very, very important part that we need to discuss. And I can show you in a few minutes before we continue. Let me see how many minutes we have. Okay, we still have some time. Okay, so when to move to break even. Because if I go into the new thing I want to start discussing, I will probably not come back to this again. So remember that price moves in waves, right? Price keeps making, for a bullish market, we're expecting price to be making higher highs and higher lows, right? This is for a bearish market. And we expect the reverse to be the case for a bullish market. This is a bullish market. And we expect the reverse to be the case for a bearish market, right? Now, if I enter for a buy, now already we understand the concept of break even. Break even is basically securing your profits and getting yourself risk-free. So let's say I enter for a buy somewhere here with my stop loss below this low, right? This is the low. I say, okay, I'm going to put my stop loss below here because price may still do some stuff and come down here. And maybe I'm targeting this high, for example. Right, this has not happened, but let's say I'm just targeting this point in price. I've done my analysis and I expect price to get to this point. Okay, the question is, at what point is it safe for me to move my stop loss to break even so that I can be moving risk-free? What does it mean to move risk-free? It means, okay, look at this gold trade, for example. When we were in it, as long as we had not moved our stop loss to break even, we were still exposed to the market. It means a portion of our capital was still exposed to the market, right? Let me replay price just a little to this point and then go back. So price was somewhere in this range, right? As long as price was still here, we were not safe enough to move our stop loss to break even yet, because anything could still happen at this point. Forget what you just saw. You have seen the whole chart play out, but at this point, you don't know if price can still come in here before going your direction, right? We don't know that yet. We don't control the market. There is none of us who has access to one button that just uploads the charts and tells the market where to go, right? The best we are trying to do is we're trying to flow in the direction of the market. Now, from this trade, you can see that we actually got the directional bias right, but the entry was somewhat manipulated in the sense that we had gotten in and then price, went in our favor a little bit and then eventually came and took us out before finishing the move to the downside, which was what we had already, forecasted was going to happen. We forecasted that price was going to push to the downside, but price went against us at first. Now, when should you move to break even? Back to what I was drawing right here. So I have taken a position here, my stop loss right here, and price is, because we know price is fractal on lower time frames. If you are watching your chart, you would see the market doing this, right? Making series of higher lows and higher highs because we're in a bullish market, right? But you are not yet safe until this high is broken. You are only safe when this high gets broken. Remember, I told you about swing highs and swing lows, right? Swing high, swing low. And this is the basic concept. This is a swing high. This is a swing low. Swing high, swing low. Swing high, swing low. Like that to infinity, right? So usually when you are setting your stop loss, you are expected to, the safest place for you to set your stop loss is below a swing low. So for this one, let us assume that price was coming, from here. Right? So price was coming from here like this. This is the most recent swing low. We are entering here at this point. This is our entry right here. And we are putting our stop loss below this low. Why are we placing our stop loss below this low? It is because we already know that if price is making series of higher highs and higher lows, we are not expecting it to break a previous low. As soon as price has broken the previous low, I told you guys something in our last class that we can say price has changed character. And the next thing that will happen is to retrace a little bit and begin to make, series of lower lows and lower highs, right? Simple concept. So it means every swing low is quite significant. Every swing low is quite important, right? So when price is moving, we are using those swing lows as a safe place, right? So for someone who wants to use a trailing stop loss, right? And he has entered this trade, and let's say he was targeting, his overall target was this high right here, right? Overall target, this high right here. Good. I'm going to draw a red line, and I'm going to make that red line my stop loss. Red line, or pink line, whatever, stop loss, right? So at this point, when we just entered the trade, our stop loss is right here at the base of this swing low, because we know that if price comes to break this low, our analysis is now invalid. I'll get to something right after this. So we are watching price, price begins to make series of, higher highs, higher lows, it will consolidate, move up and down, probably come down to our entry. Those emotional mangles that price just takes us through before it takes us to our TP. Probably come back to your entry, move high, move low, and then keep going like that. All of that is happening. But as soon as we see price making that movement, higher high, making higher highs and higher lows, and then price breaks above this swing high, this is a safe indication that we can now move our stop loss to break even, right? Because usually, most often than not, like most times, we can expect that when price breaks a swing high, even if it is going to retrace, it is not going to make a 100% extension back into this range. There are times, of course, it does, like what we experienced on gold. We're not expecting to push too much into this range, because when it was making its swing highs and swing lows on the fractal, on the smaller time frame, it was also making other highs and lows. So we're not expecting to come and take out all the swing lows, all the lower time frame lows that it had made. I don't know if anybody's understand what I'm saying. So as soon as price has broken above this swing high, we can now move our stop loss to break even. And then the concept of trading stop loss, if you're using a software or using, now I prefer to not use a software to apply trading stop loss. MetaTrader 5 on PC has that setup where you can just set the trading stop loss, such that you can just say that you can have a static stop loss, maybe 10 pips away from current price, right? 10 pips away from current price. So let me make a green line right here. And let us assume this green line is the current price. And you can tell the algorithm that keep me 10 pips away from current price. So as price is going up, the stop loss is increasing with it. As price is going up like this, we are also having the stop loss for that particular one increase alongside it, right? So when price moves up to a point and starts reversing, it will stay here. So even if price, comes like this, your stop loss will stay here. And then if price continues going up again, what would happen? It will, so price continues going up, your stop loss will move again, 10 pips away from where price is. When price begins to reverse, it will stay where it is. And if eventually price wants to over reverse, it will now take you out. So bad as it bad, like Nigerians say, bad as it bad, you will still close out with some profit instead of, losing everything, right? If your stop loss was still at break even down here and price reversed all the way back here, you would probably close out with maybe like $1 or $2 if you just had your entry a few pips away from your stop loss at break even a few pips away from your entry, right? I've had scenarios where I would be like $600 in profits and come back to see that, hey, price reversed all the way to take me out at break even. I've had really crazy trades like that, right? So what is the ideal way when price, I believe at this point, you already understand what it means. I mean, when to move your stop loss to break even, right? So when price breaks this high, you move your stop loss to break even. Next thing you know, when price breaks another high like this, that's for someone who is targeting a far position. When price breaks another high, you can do what? Go ahead and move your stop loss a little into profit. You can move your stop loss to this high, right? Because usually the experience is that this area acts as a resistance to price. This area acts as a resistance usually. So you may not want to put it exactly at that high. You may want to put it maybe a little bit below the high, right? So that even if price tries to retrace a little beyond that high, you are still safe, right? But if price extends too much, it will take you out of profit here. Good. Again, we can even still take this further. If price gets up to this point and breaks this high, this one right here, you can go ahead and do the same thing. Move your stop loss into profit. So you see that at this point, we are running risk-free and we are securing our profits. We are making sure that even if price tries to begin to go against us, we are still safe. Now, the next question is, how do we identify all of these swing highs and swing lows? Okay, so for this gold trade, at what point did I move to break even, right? So I was basically monitoring price on the 15 minutes, 30 minutes, 1 hour time frame because I prefer to stay on the higher time frames to see what price is doing. The general concept or ideology is that if you're an intraday trader, you should be between the 15 minutes to 4 hour time frame, to monitor price. But depending on the strategy and how you trade, you can actually monitor price on multiple time frames, right? I even go as high as the daily sometimes to see just to get a view of things before coming down to lower time frames and monitor stuff. I know a bunch of people who prefer to stay on the 1 minute time frame, 5 minute time frame, right? But because of the amount of noise there, I tend to stay away from the 1 minute time frame. It's not bad. I mean, if you have trained your eyes to understand the market structure and everything that is happening in the 1 minute time frame, this is the 1 minute time frame basically, right? You can see a lot more candlesticks, a lot more movement and all of that, right? Now, back to what we're talking about. Where did I move my stop loss to break even? So it was very simple how I marked my chart up in my mind. So I was like, okay, we have this impulsive move right here to this high. We had this extension to this low. We had this move to this high, this low, and then this high, right? If we had to go to the lower time frame, like the 3 minutes, you will probably see that clearly. Let me go to the 1 minute, and you'll see that we have that a lot clearer, right? And you would even see we had this hidden low right here that wasn't as obvious on the 5 minute time frame, right? Let me delete this. I don't need them more. Right. So on this 1 minute time frame, let me go ahead and draw it again so you're not confused. So we have this extension, this impulsive move to this low, to this high, to this low, to this high, to this low, and then to this high. And then realize that I did not mark all of this stuff in here because all of these are substructure movements. Price is fractal, I already know. So if I go to the second time frame, I don't have that feature active right now because I'm not on that on the highest possible plan on TradingView. But for some, if you want to confuse yourself the more with the fractality of the market, you can be doing higher high and higher low like this, but you end up being too confused. That is not what we're trying to achieve here. So on the 5 minutes or the 1 minute is enough for you to mark out your low. So what did I do? I waited for price to break below this low, and then that was when I moved my stop loss to break even. So when price was doing all of this movement, I was just watching. As soon as price broke below this low like this, I was like, okay, this is a good time to move stop loss to break even. So I moved my stop loss to break even. Now, ideally, I can put my stop loss at the same point as my entry, but we already know that on our MetaTrader, it is not so because of spread. There is that difference between the bid and the ask price. So of course, the stop loss was, like 1 or 2 pips away from my entry just to account for spread. So even if it takes me out, I would not be reading a negative number on my MT5. Right? I believe that is clear. Does anybody still have a question concerning when to, move stop loss to break even? If you totally understand, please put a 5 in the chat box. Let me know where we are. If you totally understand, put a 5 in the chat box. Let me know we are on the same page. There is only one person responding. I want to know if every other person gets it. Okay, it seems like everybody understands this particular topic right now. Makes sense. Cool. So it means we can move on to our matter for today because we spent a lot of time trying to deal with this. Okay, so let me delete all of this. And we can go into the matter for today. So we had gone through several examples in our last class, a number of examples, confluences, and all that. Right? And I was expecting that maybe someone would ask a question like, is it at any point in the chart that you see a W pattern that you can expect a buy to happen? Because those are things that you get faced with by the time you begin to actually check out stuff on the chart for yourself, because you would see a bunch of patterns scattered all over the place. For example, right here, I can see a W pattern somewhere in here. Right? Somewhere in here. It is not a perfect W pattern, but it can be misconstrued for a W pattern. So this one right here. So the question is, because I'm seeing a W pattern, does that mean I should begin to expect to buy? My answer to you is no. No, you don't just expect a W pattern in the middle of nowhere and, expect that price would reverse from that point. There are a number of confluences you may want to be looking for. For example, when I go to the higher time frame, like what I am on now, this is the 2-hour time frame, or even I can go higher to the 4-hour time frame. Where exactly is price? For example, we want to check out this W pattern, the main W pattern, this one here, that gave rise to this W pattern, the one that gave rise to this impulsive move. We want to check it to confirm where exactly is price in the scale of things. So let me use the replay button. Let us move price all the way back here, right? And then I'm going to like the 4-hour. And I'm seeing that price is in a region where we could possibly have a reversal, because we have, this area of resistance right here. You can see that price has reacted from here twice before. Price came here and gave us a rejection, and then price is coming there again into that resistance zone, and we are seeing a W pattern forming on the 15-minute time frame. Right? That is a clear indication that, okay, we are in a good place for us to see a reversal. And we know that the W pattern and the M pattern, they are basically reversal patterns, right? They're reversal patterns. So you can't just expect to see the W pattern happening in the middle of nowhere, right? There are additional confluences that we may want to look at. So let us go further to see if there were other confluences that could have confirmed that this was a nice setup to take. Let me see what the RSI has to say. I've actually not checked this. Good. So look at this point in time, let me put my marker right here. And we have our vertical line represented by that line from top to bottom, this one here, right? You can see that it coincides with our overbought condition on the RSI. Overbought, right? Or well, in this case, we do not exactly have a visible divergence. Now, the kind of divergence we are seeing here is the type you would call a hidden divergence. It's not so obvious. So we have price forming relatively equal highs, equal lows, almost equal, but not just, at a very slight angle. But we have a more pronounced, difference a more pronounced angle in the difference between the lows here. Look at it here. It's not as steep as what we have here, even if I extend the chart like this, right? It's not as steep as what we have here. We have it more pronounced, and from this point on, price began to fly up to the upside, right? I think don't worry about that. Okay, so this was a good confluence to this, and then we had this push to the upside. Let me see if my Bollinger Bands tell us anything about this. Oh no, not this one. Bollinger Bands, yeah, this one. Good. So we can see that we have our W pattern forming here, rhyming with our RSI in the overbought area, and then we can see that price is at the base of this Bollinger Band. And remember, I told you something that whenever you see price constricting like this or contracting like this, we can expect that shortly after this kind of contraction, there will be a rapid extension in the opposite direction, right? So we had a huge contraction right here, and right after the contraction in this region, we had a huge expansion to the upside here. So these are additional confluences that one could use to take trades, right? Additional confluences that one could use to take trades. Good. Now, let me introduce us in today's class to another set of chart patterns that we can use and we will begin to use in our trading. Okay, there is something called the head and shoulder pattern. Yes, I know the name sounds tacky, but it is as simple as possible. I mean, it is related, but I think it's even more relatable because of how familiar the name is. My head, my shoulder, my knees, my toes, right? So even if you forget all the chart patterns, use that as a mnemonic to remember the head and shoulder pattern, because, use the rhyme. Now, the head and shoulder pattern, how does it look? You can basically imagine that it looks like, it will take the form of a human shape. How does the human shape, how do we pose it if we're to draw it or draw a sketch, right? I have one shoulder on this side, I have one shoulder on this side, and I have a head in the middle, right? That is basically the formation. I mean, that is how the head and shoulder pattern looks like. And let us head over to the chart and, draw that for a bit. So you see that your head and shoulder pattern looks something like this. You have your left shoulder, your head. I'm not insulting, I'm just saying the head on the chart, right? The head, and then the preparation to form the right shoulder. And here we go. You have your head and shoulder pattern, right? And one thing to note is that just like we have on the W pattern, we also have a neckline on the head and shoulder pattern. So we have our neckline right here. So this area right here, where we see that, price is reacting from this area right here. So we have this first leg come down to form the left shoulder, push up, to take out this high to form the head, and then also come to form the right shoulder. This is our head and shoulder pattern. And when we say it is a reversal pattern, it basically means that a lot of price action had been happening before now. We have been having price action happening before now. Price basically just came here, formed the head and shoulder pattern. When we see the head and shoulder pattern form, we can expect it to begin to, reverse to the downside because it is a reversal pattern, right? And we've talked about this in the past, that all of these things are called patterns because we've seen them happen over and over and over again in the market in time past. And I will be able to, in our next class or next set of classes, I would be able to throw more light on these patterns and why they are important to every one of us. Okay, good. All right. Now, there is a particular tool we can actually use to draw this out. We don't need to use this one that I'm using here, the path tool. There is a tool to draw out your head and shoulder. So if you're on TradingView or whatever is in TradingView, in your tool pane, we have this side here where we have all of these chart patterns, so you have your harmonics, your XABCD, ABCD, all of those patterns, which we'll probably touch just a little bit much later in the course. But for now, we're focusing on the ones that are most important, right? So if you scroll down, you'll see somewhere we have our head and shoulder pattern, and you can use it to draw the same way. It automatically labels it for you. Your left shoulder, the head, and then as soon as you draw the head, it begins to prepare to draw the neckline for you. So you won't have to, do that yourself, right? So we still have the same thing forming here. Now, something I need to point out quickly about the head and shoulder pattern is, unlike the human head where you have a vertical arrangement and a symmetric distribution, we expect that the distance between your left shoulder and the center of your chest should be relatively equal to the distance between the center of your chest and the extreme end of your other shoulder, right? But on the chart, like I said, it will not appear like this. This is a textbook setup. This is too perfect, right? In the chart, in reality, you would probably see it take a form of something like this. It can take any form like this. You can have one shoulder shorter than the other. You can have the head unnecessarily long. You can have something looking like this, right? Okay. You can have it looking like that. You can have it, it comes in so many different ways, right? It comes in so many different ways. You can have one where the left shoulder is a little far away from the right shoulder and it is looking something like this, right? Or what is important is that you understand what is being formed in market. As long as you understand the basic concept of what is being formed, you can identify it any way you see it, right? The reverse is the case for the head and shoulder pattern. Now, for the double top and double bottom, they kind of had different names because they're English word top and bottom, right? But head and shoulder is head and shoulder, whether it is facing up and down. Just that the one that, for the bearish reversal. So if price was coming down before, so we're seeing price coming down before, and we now see a head and shoulder pattern form like this. We can begin to expect price to shoot up to the upside, right? Now, this is called an inverted head and shoulder. Inverted head and shoulder. So this is your regular head and shoulder pattern. This one, your regular head and shoulder pattern. It is the normal head and shoulder. Just maybe you won't call it the upright head and shoulder. I'm not going to give you that as an option, but it is just called the head and shoulder. But when you hear inverted head and shoulder, this is what we're talking about, right? And in the same vein, it comes in different fashions. It comes in different ways, right? You may not always see it appear as perfectly as I drew it. It could come like this. It could come, you know, with the head being extended and the shoulders being short, right? All of that, it come in different ways. But the fact that you understand the same principle that guides the head and shoulder and the inverted head and shoulder will help you be able to trade it. And how do we trade the head and shoulder pattern? It is basically simple. Remember that when we're dealing with the W pattern, we had a unique way of approaching it, right? So there were two ways that I said you could approach the W pattern, the M pattern. So the W pattern, you could have this as soon as you notice that price has formed a swing high and is forming relatively equal holds and is giving equal lows and is giving you bullish indications right here, you can now look to take price up from here. That is one kind of like an aggressive entry, or you can wait for a confirmation entry as soon as price, you know, forms the W pattern and is back at the neckline, which is this area right here. You can wait for a break and a retest of this neckline before taking price up. You can either wait for a break and retest, or you can just look for bullish indications, bullish candlesticks, and take price up from there, putting your stop loss below the neckline. You understand? Good. So the same methodology is what we'll be applying to the head and shoulder pattern. Very simple, as simple as that. Same concept, same methodology, right? So for this one, what we are doing is we would basically wait for this to form. We would allow the head to form. We would not assume anything yet, right? We're not trying to take a trade here. We're not trying to sell here. You would allow the other shoulder to form, and then you can look to take a trade when you see a bearish confirmation from here. That is option one, an aggressive entry, or you can allow price, you know, form all of this part, come to this neckline, and then you can wait and take a break and retest of this leg right here. Now, when you begin to do this over time, you can even tell beforehand, as soon as price begins to form the head, right? I know people who would even already be getting excited to take the buy. And so people, once they observe that this is a left shoulder and a head, they can take the buy from here, maybe use their fib extension to target a point to take their take profit, and then they will look to take the sell from somewhere there down here when they get bearish confirmation using candlesticks, right? That is another way to trade the head and shoulder pattern. And the same is the case for the inverted head and shoulder. The same is the case for the inverted head and shoulder. So you can look to take price when price comes in this range. Already we know price must have been in a bearish market to be forming an inverted head and shoulder, right? So when price comes this way, price is coming like this. It forms the left shoulder, forms the right shoulder, forms the left. I mean the other touch point of the neckline, and then comes to form the right shoulder. We can look to take price at the neckline, you know, after we see a break and retest, or once we see bullish confirmation from this point on this leg, we can choose to take price up from there. It is as clear and simple as that, right? Okay, so the question is, let us see how we can identify head and shoulder patterns on the chart. I mean, we have been able to identify W patterns on the chart successfully, and let us see how we can identify head and shoulder patterns on the chart. Quite very quickly, I can already see one forming right here, or it's formed right here. So we have this left shoulder, the head, we have this shoulder form right here, and look at that. We have this extension to the upside. We can see that happen almost every time because it is usually very visible. And look at the neckline. Exactly. And I think this was what I was almost trying to say. I probably didn't know how to say. The neckline doesn't have to be straight, right? It doesn't have to be straight. We could have a slanted neckline. You could have a head and shoulder pattern that looks like this. So your neckline is not going to be straight. It's going to be slanted. Do you understand what I'm saying? If your head and shoulder pattern looks like this, your neckline is going to be slanted. If it looks the other way, your neckline is going to be slanted. I believe you understand what I'm talking about here. So yeah, that is the example we're looking at right now. The neckline is not straight. It's not as symmetrical to the other side as you would expect it to be. So already we are seeing things on the chart. We are seeing our head and shoulder pattern form right here. We are seeing our W pattern form right here, and we can see the reaction that followed, right? Good. There is one, I think, let me see if I can trace it. NZD-USD on the 2-hour time frame. I think I'd seen it some time ago, right? You can see that we have a clear W pattern right here. So price was coming all the way down from the left shoulder, you know, went up from the head, went up from the right shoulder, and then boom, right? So you see that we have our neckline in this area right here. That is the head and shoulder pattern. Let me use our other tool to highlight it. Price was coming down from the left shoulder, went up, came from the head, went up, came from the right shoulder. Our tools already highlighting the neckline, and then and then have to mute it. And that is a period. Okay, so everybody's mute and we can continue our class. All right, so we can see the head and shoulder pattern forming here. Let us go to AUD USD. Let us see another example. AUD USD is selling hard. Wonderful. Wonderful. Where was it? I think I saw it. This was not very recently. This was back here. Yes. Yeah. So on the 2-hour time frame as well, you can see price came, you know, from a bearish move from the left shoulder, from the right shoulder, and then boom. Let me shrink the chart like this. See, boom. Look at that massive extension to the side, right? So you would have seen, this is what I'm talking about, right? The break and retest. Let me go back there. The break and retest. So we have our neckline here that gave us a kind of resistance in this area. And so you will see people who will be waiting for price to break this. So when price broke this, they were not shaking. You know, they were waiting for price to come back. They knew price was going to come back. And then price eventually came back, you know, gave some reactions. So perhaps a number of people would have taken their long position like this somewhere here with stops below this low, and they would have been targeting this high right here, this high right here, and they would need to get a good reward. This happened across some days. Now, remember, price is fractal, so even these things we are highlighting on the 2-hour time frame, we can see them being, you know, the same thing happening on the lower time frame. But you know, of course, when things are happening in the lower time frame, we can expect them to happen for shorter periods of time, right? Because there are a lot of things happening in the lower time frame at the same time, and everything happening in the lower time frame is going to have to feed into what is happening on the higher time frame. Of course, I'm going to keep reminding you of the other things we have learned previously, like the W pattern formation that we can clearly see here, that short price up to this side. So we came here, formed our W pattern, and pushed massively to the upside, right? Let's keep going back. Let us see. Look at this. We kind of have a small version of our head and shoulder pattern right here. We can see price came here from the left shoulder, came from the head, came from the right shoulder, and boom, look at that massive extension to the upside, right? So we can see these things happening over and over and over again in the market. Let me keep going back. Look at this. We have the W pattern reversal right here, right? So price came from a bearish thing, we had that massive bearish move all the way here, came, give us a W pattern, and it's going up. So what am I doing right now? I'm basically combining what we have learned in the last few classes with what we have just introduced you to today. So we had discussed the W pattern before, and now we're discussing head and shoulders. And I'm basically just combining all of those concepts together, right? I'm not seeing them over and over again because this is a higher time frame, right? Look at this. We have price come from this bearish move, gave us the left shoulder, gave us the head, gave us the right shoulder, and boom, we have that move up there. And price even held that bearish move for an extended period of time, right? I'm not going to count that. So this is the part I'm focused on. This is the head and shoulder area, right? And we can see it happening over and over and over. Okay. Let me go to the 15-minute time frame on a pair like gold or Euro USD, right? And I'm doing these things arbitrarily, so you know that these are not exactly made up examples. It's not like I sat down to begin to look for these examples and say, okay, well, this is where these things are found, and I want to just show them to you because it will not be effective if I was doing. I mean, we have a few examples that have been curated, but not all of them are curated like that. We've seen those ones, so let's see if we can go back and spot a few more right here on the lower time frame. I think we might have spotted this yesterday. What do we have here? We have our triple bottom from right here before that massive extension to the upside, right? And then we came here and formed a double top, boom, and price push all the way to the downside. So we have triple bottom here and then double top here, right? Good. Let us go a lot further back, and whichever we see, I'll just go ahead and highlight to you. Now, I think the head and shoulder pattern is a lot less common compared to the other patterns that we have, like the W and the M pattern, right? Right here, what do we have? We have the left shoulder, the head, the right shoulder, and now that is just disgusting where I drew it. So let me use this. This is the left shoulder, the head, the right shoulder, and boom, we have this massive extension to the upside, right? Remember I told you that your head and shoulder pattern will appear to you in a number of ways. The right shoulder on this one, that move on the right shoulder was very, very sharp. It was quick, quite quick, right? What do we have here? We have our W pattern here, boom, 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 and look at that extension to the upside, right? What do we have? Let's go. This is even a more probable area to be looking for patterns like the W pattern, right? Because of the resistance we can see in this area, right? This is a resistance area right here. So if we had come here like this and you are seeing this W pattern form, you won't be surprised when you see this kind of extension, right? We come again after all of this bearishness and you see this W pattern form, you won't be surprised to see all of this bullishness right after, right? Even from here, when price went up all the way and give us this M pattern right here, right? We won't be surprised to see all of this bearishness to the downside, all right? Let's go again. We have our M pattern right here. Boom, 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 boom. Look at that extension to the downside, right? Let's go again. I'm not now. This is another pattern that we're going to discuss in probably our next class, or maybe our next few classes. I'm going to hint you ahead of time. Maybe you can look it up on your own. There is something called the cup and handle, and this is basically it, cup and handle pattern, right? And again, the same thing. We usually have that neckline forming, and after that, you can always expect a massive push to the upside. But don't worry about that. I'm basically giving you the entire thing. That is the basic concept about the cup and handle pattern, right? But when we get to that point, we'll be able to face it and deal with it, as deeply as I would like us to, right? Because we're on the 15-minute time frame, I don't just want to start marking every M and W pattern, even though that's what we're looking for, right? We have this triple top right here. And then price, it happened in between a bullish move and price continued Price just hits. I'm like, what do you think I do? Right? We have this double top right here as well. Boom, 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 and we had a reversal to the downside. Price is loading. We have here in this area right here, you can see that we had all of these touches right here, and you can see that what we have is something like, not so clear right now, whether it's a double top or quadruple top, not so clear, but we can see a similar behavior right there. We can also see a W pattern forming right here. This one right here, right? And look, catch fun on the chart, guys. Go on your own and just look for places in the chart where we had these things forming, right? Even in this small area right here, I can see a W pattern here. This small area right here, I can see this W pattern right here. And we had that massive extension to the upside, right? And we came here, look, price extended from here, came here, formed an M pattern, extended to the downside, came here, formed a W pattern, extended to the upside, kind of stuff like that. And here, if you're looking at it in the grand scheme of things, kind of had like this big W, boom, 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 boom. But even inside that big W, big M, we had this other M here, because, that red there was a sign of bearishness in between. If you go on the lower time frame, you see it a lot clearer. Let me not spend the entire class going back and forth, highlighting and, pointing every M and W pattern, but I believe you already get the idea of what we are looking at in the chart. So yes, we have successfully dealt with the W pattern, the M pattern, the head and shoulder pattern, and then the inverted head and shoulder pattern, right? And what I want us to do a lot more is to begin to incorporate these things into our trading, right? I want us to incorporate them into our trading. Let us put them to good use. Let us put them to work. Okay, do you have any questions? Our time for today is basically up. If you have a question, please signify with a 0 in the chat box. Signify with a 0 in the chat box. Let me know you have a question. I'm going to give us just 1 minute for that. If you do not have a question, I'm going to assume that you understand everything that has been explained perfectly, and we're going to call it a day. 1 minute. Okay. If you understand everything that was explained, drop a 2 in the chat box, everybody. If you understand everything that was explained perfectly, you don't have a question, it is so clear, you can explain it back to me, drop a 2 in the chat box. Okay, getting your feedback. Yeah. Okay, good. Everybody fully understands what was explained in today's class. The head and shoulder pattern, the inverted head and shoulder pattern is a go. Right? We're done with that. That is good. That is good. Okay, this brings us to the end of our learning for this week. We'll continue from this point in our next class on Monday, right? And you'll be seeing a lot of me and Mr. God's Will interchanging next week, taking some beautiful classes, because we're taking us deeper into the course. Remember that the goal is to get you to the point where you can begin to take trades for yourself. Right? And I'm happy to see that even the demo trades that I took are just running a profit out. I've taken those trades in my live account, All right. This is it from me, guys. I look forward to seeing you again right here on Monday. Do take care of yourself. It is bye for now. Cheers.